close your eyes, exhale, feel your body relax, and let go of whatever you're carrying today.
Well, I'm letting go of the worry that I wouldn't get my new contacts in time for this class. I got them delivered free from 1-800-CONTACTS. Oh my gosh, they're so fast.
And breathe.
Oh, sorry. I almost couldn't breathe when I saw the discount they gave me on my first order. Oh, sorry. Namaste.
Visit 1-800-CONTACTS.com today to save on your first order.
1-800-CONTACTS.
Growing your e-commerce business comes with plenty of hurdles, but shipping shouldn't be one of them. Well, here's some good news. Powerful e-commerce shipping software called ShipExcel from Pitney Bowes. With ShipExcel, you can generate discounted shipping labels for both online and offline orders. That saves time and money with everything right at your fingertips. Start your free trial of ShipExcel from Pitney Bowes today.
Small and medium-sized businesses, or SMEs, play a vital role in economies all around the world. Yet they often feel undervalued and underserved in many areas. This is a topic we frequently return to at 11FS, and for good reason. So today we're exploring why this conversation keeps coming back and what the industry can do to serve this crucial sector more effectively. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. And in this week's episode of FinTech Insider, we're diving deep into the world of SMEs to ask, how can the industry meet their needs more effectively and on a global scale? We're always banging the drum for SMEs at 11FS, and I'm delighted to be joined by a fantastic lineup of 3 SME experts who are here to help discuss how the industry can address the needs of these crucial customers more effectively. So first of all, we have a welcome return for Conrad Ford, Chief Product and Strategy Officer at Allica Bank. Thank you so much for joining us today, Conrad. Can you tell us a little bit more about Allica Bank and a little bit more about your role there?
Hi, everyone. Yeah, so Allica Bank, for those that don't know us, we're a UK bank. We are a bank. It's a misused term these days. We're a UK bank, and we're notable for our focus. We're very focused on a segment that we internally call established SMEs. So we'll talk a lot about SMEs clearly, but our segment is the larger SMEs, typically that employ a meaningful number of people and have been around for a significant amount of time, which we think is a very underserved segment. And actually the proof point there is we are officially the fastest growing startup in Europe, believe it or not. So there is clearly a need for a bank to focus on that segment. On my own role, I'm on the leadership team. I've been here pretty much from day one of bank going back. I've got quite a wide remit, but my core responsibilities are product, marketing, and strategy.
Fantastic. Well, welcome. And I'm also delighted to welcome Robin Jones, who is co-lead at iWalkerPay. Welcome to the show, Robin. Can you tell us a little bit more about iWalkerPay, and even if I've pronounced that correctly, and also about your role?
Yeah, thanks very much indeed. Great to be here. You pronounced it perfectly. iWalkerPay, as co-lead of iWalkerPay. I'm focused on transforming B2B transactions, in particular by providing digital trade credit solutions that benefits both suppliers and buyers. We launched in 2020 as an alternative payment option as opposed to payment terms. In B2B transactions, we've made £100 million available in trade credit, and we've helped hundreds of suppliers and thousands of buyers with iWalkerPay get that transaction done and offering the payment terms they deserve.
Thank you and welcome. And I'm also delighted to welcome Hannah Sommer, Director of Go-to-Market and Strategic Partnerships at Liberis. Welcome to the show, Hannah. Could you tell us a little bit about Liberis and a little bit about your role there?
Well, thanks for having me back. As you correctly said, my name is Hannah Sommer. I'm a Director of Go-to-Market Strategic Partnerships at Liberis, and my role is all about building strategic alliances and scaling out go-to-market efforts across regions. Liberis in general, we're a global embedded finance platform. We're currently live in 15 countries, and we're focusing on helping small businesses access fast, flexible funding through our partners. And as I said, I'm very happy to be back at this podcast and chatting about small business finance.
Well, wonderful. And welcome to you all. Okay, well, let's get into the discussion. Now, as I said, we've talked about SMEs many times on this podcast. But at 11FS, when we talk to SMEs, we often hear them complaining about, some of the challenges, particularly the financial challenges of running their businesses. Setting up a small business is not easy. Running a small business is not easy. But a lot of business owners are spending time worrying about the finances and having to, sort of to some extent get distracted from the business of serving customers to sort of try and sort out their finances. For listeners who haven't listened to every episode of the podcast or who are not experts in this field themselves, I'd love to hear from the three of you about what you think some of the big unsolved challenges facing SMEs are. What are the things you're hearing from where SMEs are really struggling? Hannah, perhaps we could start with you. What are some of the things that you're hearing from most from SMEs where they're finding it difficult to get the services that they're looking for?
Yeah, I think SMEs are like traditionally the massively underserved part of the economy. And I think what they're really struggling with is access to funding and access to fast funding in many cases. Because traditionally SMEs do not have the massive liquidity. They don't have loads of money stacked away somewhere. And often they need to make very fast decisions that are going to make or break their business. So I really feel like they are the part of the economy which is massively underserved, for example, also by banks, and they are massively struggling to get the access to growth capital that they need to accelerate their businesses.
Robin, are you seeing and hearing the same sorts of pains, or are you hearing other pains as well?
Yeah, so what I hear quite often when I'm speaking to particularly the suppliers, the sellers who work with iWalkerPay, they're concerned about how things are, the uncertainty and the sort of turbulence out there. So what they're turning to solutions like iWalkerPay to give them that edge, to help them with some predictability, to help them sort of sell with confidence. But absolutely, certainly a tricky time out there for SMEs right now.
And what are your views, Conrad? Are you hearing similar things?
So I guess my opening statement would be that SMEs are a classic 80-20 segment. So in other words, about 80% of SME revenue or turnover is in about 20% of the SME population. So the vast majority of SMEs, the 80%, are micro businesses. They're individually very small, but typically one-person businesses, sometimes one person or sometimes two people businesses. But they're individually extremely small. Typical turnover could be £50,000. It's that low. Although they're numerically a lot of them, collectively they're a very small part of the economy. They're only about 10% of the economy. The 20% of the larger SMEs is the vast majority of SME turnover. Now, the micro as a segment, the volume segment, is actually pretty well served by incumbent banking services because they're very similar to consumers. They're very consumer-like. And fun facts, their favorite form of finance is a personal credit card or micro business. So they've kind of gone through the same journey with the incumbent banks as consumers have, which is they've been pushed into digital services to reduce servicing costs, but generally speaking, fairly competently. It's the 20%, the medium-sized businesses that really struggle with the incumbent banks because they have much more complex needs. And as they've been pushed into call centers and pushed into purely digital apps, their complex needs have not been properly reflected. And they used to be able to solve that through relationship banking, through branches, and that's been taken away. So really, there's kind of an acute tip of the spear for the challenges that SMEs have. And it tends to be the businesses that have reached a certain level of complexity and scale, at which point traditional banking models kind of break down.
Because we used to sort of talk a lot in the industry about, how the banks were sort of letting down the sort of smaller and the medium-sized businesses in particular, as you say, and that how that part of the economy was underserved. Is that still the case because of the rise of so many sort of alternative providers, digital banks like yourselves at Allica and so on, that actually, to some extent, we've seen fintechs coming in and filling some of that gap? I mean, I think in Conrad, you're obviously going to say yes, because obviously you're a big part of that. And so too, Robin and Hannah, but maybe Hannah, I mean, does the sort of failure of the more established banks to serve those sort of larger SMEs, the mid-sized firms, matter so much now, precisely because we're seeing other firms coming in?
Yeah, I think it's really a mix of both, because the reality is, yes, we are seeing alternative finance providers coming in, embedded finance platforms like Liberis coming in, but the reality is a lot of SMEs are still. They're still very loyal customers to their banks, and not every bank is collaborating with the likes of alternative finance providers like or embedded finance platforms. And I think that's where that gap exists, because the SMEs love being with their banks, and that's fine. But some of the banks, I think we're not as fast as we could be in terms of like collaboration with banks to give access to funding, for example, for SMEs that are loyal banking customers. And that's where I really see a huge gap, but also a huge opportunity.
Hannah, you've mentioned speed a couple of times, and I want to bring Conrad in on that point because, Conrad, we had Richard Davies, your CEO, on one of our recent Insight shows talking about how Allica is trying to prioritize digital first loans. And I believe a big part of that is obviously just trying to be faster. To Hannah's point, Conrad, how important is speed? How important is it to get funding decisions quickly? Is that crucial or not?
Yeah, but probably not the levels of speed you expect me to talk about. So you're probably going to tell me, well, probably when people talk about speed, they're probably thinking sort of consumer language of money in your account in a minute. The reality is, well-run businesses, they don't need that, right? They tend to know if they need money, if they're going to have a tight payroll in a month's time, they're going to know that in advance. The problem is, for the core of SME lending, the incumbent banks are extremely ridiculously slow. So we're talking months to be clear here. So just breaking down the SME lending market. So here in the UK, there's about £250 billion of SME lending in total, so £250 billion. 2/3 of that is secured against property, so business properties like factories, warehouses, etc. When you include secured against other physical things like machinery and trucks, you're talking 80-90% of all SME lending is tangibly secured. That core of the market is extremely slow moving. So a typical incumbent bank will take a couple of months to make a decision. And the problem statement here is that, let's say you're a well-run business that's been working to get a larger premises on the outskirts of your hometown, because you've been growing so quickly and someone comes onto the market, you can't wait 2 months to put an offer in, right? These are entrepreneurial businesses that need to move at a certain pace. They don't need to make an offer or get the money in a minute, but they certainly need to get it in less than 6 months, which is what incumbents take. So, and actually, there's really no excuse for that, right? When you break down the steps of what a bank is doing when it's deciding to lend against a business's new premises, right? There's probably a couple of hours of work going into that, right? So how they need to string it out over 2 months is crazy. It gets quite Kafkaesque, by the way. So businesses get asked for up-to-date management information because the stuff that they provided before is out of date. So it's out of date because the bank's sat in it for 2 months. So it gets really quite crazy. So businesses in our segment, sort of mature prime businesses, they don't typically need money instantaneously, but they do need money that moves at the speed of their business and entrepreneurial skills. So a decision in a couple of days is plenty good enough, because of the larger ticket stuff like whether it's to buy premises. But believe me, the incumbents are not delivering that.
Thank you.
May I quickly jump in here, because so basically, like, completely agree on the higher ticket stuff. But what I'd really like to add here, because obviously SMEs involves like a huge range of businesses, and we're talking the one-man band coffee shop, as well as like maybe like a sort of medium-sized family business. And I would agree with the higher ticket deals that speed might not so much matter, and it's more the customer service and so on. However, what we're seeing, and this is true across all the 15 countries we're live in, is that speed actually does matter, specifically for the smaller businesses, and because some of them are actually using the funds to cover payroll or to cover invoices, because they just don't have as much money stacked in their bank account. So I think, like, yes, it's true for the bigger businesses that speed might not be as interesting, but for us, like, the reason why SMEs are taking Liberis financing and also are returning to us repeatedly is the speedy access of funding. And we can offer funding in minutes for certain amounts. Obviously, that gets different. Like the second you get above certain amounts, depending on the jurisdiction you're in. But that is like and access to funding is definitely something we're seeing is as very, very important for our customers specifically.
Thank you. Robin, what do you think? Do you think the situation is getting better for SMEs in general? That it's getting easier for them to get financing gradually over time, or not? I mean, there's some important points about the sort of segmentation and different SMEs and so on. But what's your view overall?
I think overall, access to financing for SMEs is probably growing with the increase in alternative lenders especially in the last 10 years in the UK. So we've, I think probably the big problem is awareness. I think we ran a poll last year, and I think we found just about 1/3 could name an alternative lender. So I think what it is those SME businesses, maybe they're all familiar with the high street banks, the bank they maybe use for their personal current account. Maybe they're a little bit apprehensive about trying these alternative lenders for the first time, but maybe when they do, they find that they have a really nice sort of tailored solution to their needs. And they find they actually do get the customer service and the speed that perhaps they might need. So yeah, I think overall the landscape is looking really good for SME lending. But really in the UK, it's looking really, really up. Yeah.
We're talking about lending, or I'm talking about lending in a sort of very broad way, as if it's all sort of one thing. But of course, there's lots of different lending. There's not only different sort of types of lending, but there's lending for sort of different needs. There's sort of the short-term cash flow type funding, and then there's the longer-term sort of investment that could ultimately even be equity rather than debt. One of the things we hear a lot when we talk to SMEs is particularly the larger ones, sort of to your point, Conrad, about the differences between the larger and the smaller and the micro, but particularly the ones that serve other businesses, often really struggling for cash flow, because if you serve businesses or you serve the government in the UK or in many other countries, you get paid after 60 days, maybe after 90 days. If you get paid, at all, you get paid late, and that creates huge issues. Are we seeing better solutions for things like cash flow financing? I mean, actually, maybe I'm going to throw this one back to you, Robin, because I think part of what you're doing is related to sort of that. To what extent are we seeing sort of cash flow financing getting better and it becoming easier for small businesses who are maybe, importing or exporting goods, and they've just got long cash flow cycles? How much is that part of SME financing improving?
Yeah, I think that's exactly what iWalkerPay is our mission, essentially, is to, as I mentioned, to help sellers get paid. So they're not waiting those 30, 60 days, perhaps what they write on the invoice, what the terms are. We all know some buyers are going to take longer than that to pay. So that makes it very unpredictable in terms of cash flow. So you're sitting and waiting, and then you might have to sit even longer and wait even longer. Let's not even get into bad debt. So that's where iWalkerPay really helps. You get paid upfront. You don't have to worry about any of the risk. And the buyers hopefully going to become more loyal because they are accessing trade credit terms perhaps that, again, are not accustomed to. So they're really grateful that they can do that. So it's a really nice solution for everyone involved. They get paid upfront, improving the cash flow of both businesses that are involved in a B2B transaction.
If I could just chip in on that, I think one of the untold stories about SME lending is the elimination of overdrafts for SMEs. So the story behind this is that prior to the global financial crisis, the incumbent banks, this is true in most Western territories, by the way, but the UK is an extreme example, had kind of gone too far with extending overdrafts to small businesses. So you have situations where a business might have an overdraft that's half the size of its turnover, which is just untenable as a working capital facility. After the global financial crisis, those overdrafts just got eliminated at enormous scale. So in the UK, they went from something like 40 billion to 5 billion. And partly it's because the banks had learned the lesson, partly capital requirements were changed to make it less attractive to give overdrafts. What that meant is the sort of ordinary established businesses used to have that kind of facility they could draw down on. So if you're a hotel in the UK, terrible time of the year is it's March, just before the season kicks off again. You'd go into your overdraft. If you're a shop, you'd go into your overdraft part of Christmas to buy stock. the overdrafts are taken away, and a lot of the boom in digital lending to SMEs has been driven by the fact those overdrafts aren't there anymore. It's an enormous problem. And many times the customer has taken any solution to get the cash to get it through that period, because the overdraft used to be there, and whoever reinvents the overdraft and finds a way to bring it back cost effectively and capital efficiently, and will change the world, because it's a very important part of the market.
Yes. I suppose to your point, it may not be an overdraft. It may be a different type of financing. I want to pick up on a point you made, Robin, a couple of minutes ago, where you're talking about the low awareness of alternative funding providers in the UK and by extension in many other countries as well. Hannah, do you see any ways that the industry can address that? Because you do have, in many countries, you have a variety of new finance providers trying to come into the market, trying to improve things from SMEs. But SMEs who are busy running their own businesses often haven't heard of these firms. Clearly, every fintech would like to have an enormous marketing budget and do huge campaigns. But in the real world, how can firms kind of overcome that? And sort of alternative capital providers, new banks and so on. How can they get the word out to small businesses?
I think that's a really good question, and if I had the perfect answer for it, we would probably be doing it. But let me let me try and give you sort of my view. And I think it's like, as I said, like every single time it's about financing. It's a trust thing, right? And I think this is where partnerships come in and are super important, because the reality is, let's take Liberis as an example. Liberis might not be known to a random SME in Germany or in the UK or in the US or any of the countries we live in. However, the names of our partners are known to them because they are already in a business relationship with these SMEs. So I really feel like that sort of white labeling and collaboration between companies who have access to SMEs and who have long-standing relationships, and then on the other hand, companies like Liberis, who can offer like alternative financing, who might be able to serve SMEs that might not get access to funding through traditional methods. These partnerships are absolutely crucial. And I think so what we do, for example, a lot is that we, together with our partners, join partner events, talk. For example, I was in Frankfurt like a couple of weeks ago to talk about financing or about our products to the partners and SMEs of our partner, if that makes sense, because that creates that sort of trust. The fact that it's not just an unknown brand or name standing there talking about a product, but really backed up by a huge brand, for example, a big acquirer.
Thank you. Robin, are you also using partnerships, or have I misunderstood?
Yeah, not so much in iWalkerPay. I guess our partnerships are with the suppliers, the merchants that we work with. So you could think of that as a partnership in a way. We partner with these merchants on a long-term basis. They will embed iWalkerPay into their systems, into their checkouts. Their staff will be able to offer iWalkerPay. So it becomes very much embedded into their own business, and in turn they offer that to their customers. And so absolutely, these partnerships we form with these merchants are so important to us and important to our success, but equally to them as well. So we work hard to understand their needs and understand their customers as well. So those are the type of partnerships we're running in iWalkerPay.
Thank you. Conrad, you made a really interesting point a few minutes ago about overdraft, that there's a glut of overdraft financing, and that 10 years ago, 15 years ago, there was almost too much overdraft financing available for some companies. How do you think about that sort of risk now that, well, probably not for the sector as a whole, but for sort of individual businesses, any provider might end up almost lending that business sort of more money than it can absorb, or lending too much money for businesses that maybe are not that successful. How do you think about and manage the sort of the risk and of how much you lend to individual businesses? And I realize it's a big and complex question.
Yeah, but it's a good question. So, I mean, my starting point, you kind of touched on this already. It's fundamentally different debt that's around long-term investment in the business versus day-to-day working capital or cash flow. They're two fundamentally different things. And you can easily use the analogy of household finance to say that your mortgage, for the vast majority of us, by far the biggest piece of debt that we ever incur, if that was paying 20% APR, then we'd all be bankrupt by Wednesday. So the margins on mortgages are very, very low. Sometimes you get a mortgage below the Bank of England base rate, believe it or not. So the margins are extremely low, but that's made up by two things. Firstly, they're very long term. So the lifetime value of the mortgage is substantial to a financial services provider. And secondly, it's heavily secured. So in other words, you will own, as a financial services provider, you'll own the house at the end. It's really no different in the business world. We have commercial mortgages, ordinary, consumers have residential mortgages. Consumers have car finance, we have asset finance and trucks and machinery. So it kind of works the same way. These are long-term investments. They're relatively low margin, and your tolerance for credit risk is very low because the margins are low, right? Just as they are in residential mortgages. It's fundamentally different short-term cash flow. A well-run business might need a cash flow facility of maybe 2 months turnover. Is a good rule of thumb. So they may need it for seasonal trading, for example, or payroll or VAT bills, which happen on an instant basis. So these are much smaller parts of the overall debt base of the SME. They should be. Therefore, they can afford a higher margin, and margins need to be higher to justify it for the lenders. What you'll generally speaking find is that the secured lending is dominated by banks, whether it's the big incumbent banks or challenger banks like us. And actually here in the UK, challenger banks like Allica now represent about 60% of SME lending. The big banks were about 80 or 90% 10 years ago, so it's fundamentally changed. Whereas the non-bank lenders, because it's higher margin, will tend to be more dominant in the cash flow finance. And you have two very good examples there to the major players.
Thank you. Okay, we'll just take a very short break here, and we will be back in a moment.
On WhatsApp, no one can see or hear your personal messages. Whether it's a voice call, message, or sending a password. To WhatsApp, it's all just this. So whether you're sharing the streaming password in the family chat or trading those late-night voice messages that could basically become a podcast, your personal messages stay between you, your friends, and your family. No one else. Not even us. WhatsApp. Message privately with everyone.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Welcome back to FinTech Insider Insights. In the next part of this podcast, we're going to dive into what the future looks like for SMEs and how fintechs can help them tackle some of the more complex challenges and serve some of those gaps that we were talking about. So, one of the things that I think has been really interesting about small businesses over the past decade is that the market's sort of changing from a small business sort of lending or borrowing market where small businesses were seeking financing to really a much wider small business services market where digital providers are offering a variety of different services to SMEs, starting to integrate those through digital platforms. And we're on that journey, and I'm not saying it works perfectly and that every API integrates perfectly with every other API. Of course it doesn't. But we're seeing a shift in how things work. So, Hannah, I'd like to come to you first to think about embedded finance and whether that's part of how we might improve cash flow. Because as we see more small businesses moving to digital accounting systems, moving to sort of ERP systems and so on, do you see that as an opportunity to serve SMEs better. Can you tell us a little bit about embedded finance? Because a lot of talk about embedded finance a couple of years ago, and then people have gone a bit cool on it, particularly because we've had a number of fiascos in the United States, largely unrelated to the model as a whole. What's your view on embedded finance for SMEs?
Yeah, I think embedded finance is absolutely still relevant because it gives SMEs access to capital literally when and where they need it. So that means, it's within their e-commerce sites, within their payment processors, accounting tools, booking systems, wherever the businesses are and whichever platform they're logging on a regular basis. And what that means for the businesses is simply that it reduces friction and gives them access to funding. Is a better customer experience, and a lot of the time it's also it means for them that they are actually going to be approved, and basically lessens that sort of fear of rejection that a lot of small businesses have. So I think, like potentially a little bit to Conrad's point earlier, it's not a sort of one size fits all, and I'm absolutely not saying yes, it's the right solution for absolutely every single funding need or every single size of business. That's not what I'm saying, but it's a great tool, embedded finance, to help SMEs smooth out working capital gaps or manage seasonality, for example, in restaurants, purchase stock, go after growth opportunities when they, like, for example, have a great offer to invest in something or buy stock at a cheaper rate, and that's where speed comes in, for example.
Robin, Walker was very quick to sort of partner with other companies to sort of get access to SME data and so on. How important are those sort of integrations and those sort of partnerships to providing better funding to SMEs?
Yeah, crucial. I think it has a couple of things. One, it opens up the access to finance, where SMEs want to find it and use it and utilize it. But it also helps us as a business get to know those SMEs, help us understand them, give them positive decisions in terms of approvals and approval amounts as well. So, by working with these partners in an embedded way, it just allows us to give a better service. So it can only be really good for SMEs, frankly.
Do you see reluctance from SMEs sometimes to share data with you, or have attitudes changed?
I definitely see it. I see it. I can think of a number of cases over the last few weeks. People are, reluctant to share information. They're worried that they're going to breach some regulation by sharing it, privacy or other things. So there is a reluctance. Often we talk to our customers and say why we need it. I think when they understand why we need it and what it can lead to in terms of the benefit to them going forward, generally. They see the benefit of that, and they're quite happy to do so. And that's a good thing. Yeah.
And presumably it's pretty crucial to some of your sort of credit decisions. Being able to see the sort of turnover data and so on just enables you to make much smarter decisions than you would without that data.
Yeah, for sure. It really is seeing their turnover data. So through open banking integration, for example, allows us to go much further to understand how business ticks. We talked about seasonality. We can understand that if we're looking at a longer period of time. We're really looking under the hood of a business. Otherwise documentation isn't there in the sort of public domain, a company's house and so on. So that's why that data is so crucial. So again, if SMEs understand why we need it and they can share that with us in a safe way, that they trust us to look after their data, then that can help us make the best decisions for those customers.
And Conrad, is that true at Allica Bank as well? Are you also trying to make use of sort of companies sort of trading data and so on to help with underwriting decisions?
Yeah, I mean, there's certainly elements of that, albeit because things work, relatively slower in our world because it's more measured lending, then sort of the speed advantage goes away. But obviously, insight, it's always valuable and gives you a competitive advantage. We would like to think that we're kind of going to do for SME lending what Capital One did for consumer lending. In other words, use data to open up new valuable lending opportunities that are mispriced or not lent at all. I actually think on the data access side, the most interesting story in our segment larger SMEs is actually on the day-to-day banking. So when you begin to unpick the day-to-day banking activities of a medium-sized business, there's enormous amounts of admin and pain going on there in the day-to-day banking activity. So the most famous example, which is largely solved these days, is you used to have to download your bank statements or get your paper bank statement and reconcile against your accounting software. These days, your bank account feeds via relevant banking into your accounting software and auto-reconciles. So a completely useless manual task that used to take hours every month has disappeared. But actually, when you unpick, there's tons of these examples. Payroll is really painful and manual. Tax is really painful and manual. And there's a really exciting opportunity to kind of use connectivity, not open banking specifically, but generally speaking, APIs to take enormous amounts of pain out of the day-to-day management of businesses. And interestingly, one of the things we stress about in this country is productivity. We have a massive productivity issue, particularly amongst our medium-sized businesses. And the government's answer is always put on something like a lean manufacturing accelerator and teaching how to build Formula One cars. Actually, the productivity gains come from getting rid of basic admin. Because they're still using desktop accounting software, which is common in our segment. They're doing a lot of admin, which means they spend time in the business, not on the business, which is what it should do. So I'm really personally excited about that, the kind of opportunity to take a lot of pain out of those business owners. For some, it just means they're going to get some time back with their families. For others, it means they get time to build a really much bigger business, both of which I think are nice outcomes.
Well done for using exciting and tax in the same sentence. But I think you're making a really, really important point. Hannah, do you agree with that? Do you similarly see lots of opportunities for maybe automation? I mean, we've managed to get this far without mentioning AI, but do we see opportunities for SMEs to make smarter use of automation or digital technologies and so on to improve productivity, improve efficiency?
Yeah, absolutely. And unfortunately, I have to manage AI at this stage because I do see it as a tool that absolutely streamlines and automates time-consuming manual tasks. To Conrad's point just now, this could, like in our case, for example, this could be any data entry to documents, pre-populations, for example, is an amazing thing that really helps us making faster credit assessments, faster decisions. If you're thinking small fraud detection, anything like that, means like, hey, the customer doesn't have a super long wait time and they don't have to submit piles of paperwork or wet ink signatures or anything. And instead, we can just use AI-powered systems that can sort of, flag issues and recommend next steps. And if you need human intervention, great, you can have that. But if not, and if all the documentation is there in place, then the customer has like a really, really fast decision that's highly likely going to be way more accurate than if a human had made it.
Robin, what's your take on the potential for AI to improve either, sort of funding and cash flow and some things we've already been talking about, or maybe SME operations more widely?
Yeah, the area I'm fascinated in is really on the customer service side, actually. For sure, there's other things in risk and credit decisioning. But perhaps one of the sort of the best way to start is really just the service that we provide our customers. In terms of that's also where speed comes into it. They want to get the answers they need as quickly as possible. They don't want to spend lots of time hanging on a phone line. So that's one area where iWalk is really good in terms of getting through to the person you want to speak to, but actually alternatively just getting them answers that they need. So I think that's actually a really interesting area that we're looking to bring more in the next year or so.
So faster service, better fraud detection, faster decision making. There's a whole series of potential benefits there. Conrad, you brought up this topic of sort of automation, but we didn't actually give you the chance to talk about AI. What do you see?
Yeah, I mean, something that I'm really excited about, and what I'm going to spend my next couple of years on is, I think there's an opportunity to build a sort of new type of intelligent bank. So let me just unpick that a bit. So a medium-sized business it's a business that's got to a scale where the cash flow position of that business, for example, can't be in the entrepreneur's head. It's just too complex. There's multiple bank accounts. There's multiple ways that money come in, money come out. A large business will have a treasurer whose day job it is to look at that money, to figure out you're going to struggle with payroll in 2 months' time, figure out you've got an upcoming tax bill and put the money aside and earn interest and ring fence the money. You can't afford a treasurer because you're not big enough to pay someone 150 grand a year to just look after cash. So they're big enough to need a treasurer, but not big enough to afford one. But actually, a lot of what a treasurer does, a new type of bank can do that for a customer. So it can think ahead and think payroll's looking stretched in September. Let's make sure you've got money for corporation tax bill in October. So what about a new type of intelligent bank that kind of works alongside you, almost like your treasurer, and helps you put the money to work? And one of the really exciting things about that as a challenger is the incumbents. Their entire business model relies on apathy and ignorance. In other words, they make money from customers not realizing they could make their money work harder elsewhere, they get a cheaper form of finance. So it's very hard for them to respond against a bank that actually acts in the customer's interests. So I'm quite excited about that, John.
I love that. What do our other panelists think is coming in the future for SMEs? So we'll have sort of intelligent automated treasurers, or delivered potentially by digital banks. What else? Where else do we think there's opportunities to fix some of the sort of ongoing financial pains that SMEs face? Robin, is there anything else you're excited about in the future that you think is coming?
Well, the main thing I'm excited about is iWalkerPay. They're really sort of seeing more and more businesses access digital trade credit. I think that's really important for cash flow. We're seeing bigger businesses turn to iWalkerPay on that to use iWalkerPay. What I mean by that is the buying businesses actually, so they're looking to access trade credit in a smarter way. Other than that, really, sort of RegTech has really sort of see that coming on. That should help businesses deal with the sort of compliance and regulatory issues they have to handle as well. So that could be really important for SMEs.
So you're thinking about, I'm immediately thinking, when you talk about sort of RegTech, I'm thinking about, businesses that are importing or exporting and having to worry about, taxes and licenses and things like that. But even just a, business just operating in its own domestic market, they've got a lot of laws and regulations they have to comply with, and they've got to have someone thinking about that. And I think what you're saying is there's a huge opportunity to automate a lot of that. Is that right?
Yeah, I think automation and, no one wants to slip up on that sort of stuff, and they want to get it right. So any tools, I think that could make them work smarter. I'm sure that would be music to the ears of SMEs, yeah.
And Hannah, what about you? What's your view on sort of exciting things that we could see happening over the next few years?
So what I'm hoping is that basically alternative finance providers will get more visibility in general with SMEs, because in an ideal world, from my perspective, SMEs should have access to the specific type of funding when and where they need it. And that obviously goes with, as I said previously, collaboration between different financial services and payments providers, but then also bridging that trust gap. And I'm saying this just heavy +1 on what Robin and Conrad said on automation and AI. Obviously, that's super important. I think as a third thing that I'd really like to bring in is like policy and regulation. And I think that's something where the respective governments of countries can really help to like update regulatory frameworks to keep up with innovation. Because I think whilst that might be really good in the UK, I do see other countries that might be like lagging behind with that a little bit. And that heavily, at the end of the day, that heavily impacts customer experience if, for example, the regulator wouldn't allow use of AI or that type of stuff. And we see that quite a lot in Europe specifically. I know we'd like to complain in the UK, but I think actually regulation is like very far ahead here.
Yeah, I think we certainly on this podcast we've been big fans of the work done by the regulators in the UK, which is not to say there aren't regulators in many other countries, like Brazil and Singapore and so on, also doing some fantastic work. Okay, so let's imagine we have this conversation again in a year's time. So it's July 2026. What do we hope's got easier over the past year for SMEs? What sort of problem that SMEs have today do we think might be easier, not solved, but just a little bit better in a year's time? Robin, what do you think what do you think is going to get better for SMEs over the next year? Bearing in mind there may be things that get worse, right? We may have more tariff wars or whatever. But what do we think might get better for SMEs over the next year?
Yeah, I mean, I think speaking just in terms of iWalker, we're constantly iterating, just making it easier for customers to access finance. So I think it's just continuing to innovate, continuing to just make products that really serve SMEs. So whether it be diversifying product ranges and the models that we offer in terms of flexible lending, whether it be merchant cash advance or even a credit card, just offering more of an array, getting that out to SMEs. I think it's only going to continue that sort of fintech and alternative lending. Snowball is just going to keep coming. So I talked about awareness. I think it's going to just improve. So I'm really hopeful for SMEs going forward. I think it's I think there's a lot of businesses looking out for them now. Indeed.
Conrad, what do you hope will have got better over the next year?
I'm going to give literally the most boring answer. Literally, stability. So just put yourself in the shoes of an ordinary established business that's been around for more than 10 years, and you're a UK business. You've had the trade disruption of Brexit. You've had the political disruption that followed. You've had COVID, a pandemic, which for many businesses meant they had to shut down for months at a time, no revenue. Then you had the fastest rise in inflation in decades, then the fastest rise in interest rates in decades. You've just had a wave after wave, almost like each year you've had, and you'd be to pain. Frankly, it's an extraordinary credit to these businesses that they're still there. And the vast majority of them are still there. They're very resilient, and they experienced business owners can take what they call management actions to get through these periods. But what they desperately need is a period of stability. And I hope they get that. Obviously, we've got the potential trade wars, but certainly in the UK, it looks like, fingers crossed, that it won't be as bad as everyone thinks. Because I just feel that there's pent-up demand to invest in the SME population. If you're a transport business and you have a fleet of trucks, you may historically have replaced a truck every 5 years, but you can easily keep it going for another 7 or 8. It's not as efficient, but it's safer from a cash flow perspective. I really hope that when there's a period of stability, then we'll have a period of investment and optimism, because I think there's a lot of potential to unlock in the SME population. And of course, they'll have a bit of spare time so they can sit and think about how much better Allica Bank needs to incumbents.
I love it. And Hannah, how about you? What do you hope will have got better for SMEs over the next year?
I really hope that there will be a true integration with banks and with because I really feel as I said previously, like really feel like that truly personalized financial services at scale would massively help small businesses. And obviously, like on top of that, I do hope that there will be continuous innovation and automation that will be also accessible to small businesses, because a lot of the time I feel like there's going back to what we talked about at the start of the podcast, there's a lot of solutions for potentially enterprise size businesses, but then for small businesses it might be they might be a little bit underserved when it comes to like any of the automation solutions that are on the market at the moment. So hoping that will improve over the next year.
Fantastic. I think we're all hoping for stability and growth over the next year, aren't we? All right. Well, that wraps up today's discussion. The three of you have been absolutely fabulous. I greatly enjoyed talking to you all. So thank you so much for joining me. Where can people who are listening find out a little bit more about you and a little bit more about your companies? Hannah, where can people find out a little bit more about you and a little bit about Liberis?
So traditional channels, basically LinkedIn and our website, liberis.com, are the best ways.
Conrad, where can people find out more about you and about Allica Bank?
So Allica Bank, go to allica.bank. And if the website is not self-explanatory, then find me, because I'm just effectively CMO. In terms of me, I'm quite active on LinkedIn, but I'll give a full warning that I tend to take many weeks to follow up. I do my LinkedIn in backwards, but if you manage to get through to me, then I'll engage with you there. So Conrad Ford on LinkedIn. And
Robin, where can people find out more about you and about iWalker?
Yeah, you could find me on LinkedIn, iwalkerpay.co.uk, or feel free just to give us a call. Leave a message if you want to speak to me. I'll get back to you. do it the old way.
Fantastic. And you can find me, Benjamin Ensor, on LinkedIn, and you can find out more about what the team at 11FS has been up to on social media or on our website at 11fs.com. So thank you all so much for listening. If you like what you've heard, please do share this podcast with a colleague or a friend. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider, or you can email us at podcasts@11fs.com. So thank you so much to my three panelists. Thank you to all of you for listening, and goodbye.
Mamá, papá, mi cuerpo crece a un ritmo alarmante y la ropa que me compren ahora me quedará muy pequeña muy pronto. Pero su billetera no tiene que sufrir por la moda con los precios bajos de la vuelta a clases de Amazon. Amazon, gasta menos, sonríe más.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.